Welcome back to the Stuff About Money podcast. I am your host, Erik Garcia, certified financial planner. And today I am joined by a new friend of mine, David Foate. David is a tax attorney who specializes working predominantly with independent insurance agency owners and the buying and selling of their practices. David is out in California, and that's a commonality that David and I have is that we do work with a similar client, agency owner. So I wanted to bring him on today to talk about the area of his practice that he tells me he enjoys most. It is the buying and selling of practices of agencies. So David, welcome to the Stuff About Money, man. How are you?
I'm doing well, Eric. Thanks so much for having me. I'm excited to be here with you today.
All right. So like tax attorney from California, it's a really kind of thin description of you. Tell us a little bit more. Kind of fill that out for us.
Yeah.
Who is David Foate?
Who is David Foate? All right. So I've been doing this a little over 10 years, probably closer to 15 now. Geez, time flies as we get older. So started my career working for a big tax firm, international tax firm, doing work primarily around captive insurance. So setting up those 831Bs uh, for business owners and their families and helping with that generational succession planning and wealth planning for them. And then as I got tired of travel, I moved my family back to California and had the opportunity to just continue working with agency owners. So it's just been great. Probably 60 or 70% of my clients are agency owners. Here in California, they allow us to specialize in certain areas of practice after you've worked for so long and proven yourself worthy. And so here with the state bar, I'm a certified tax specialist. So tax law, tax planning, a lot of M&A work. It's very tax heavy. So that's where I spend a lot of my time day to day with my clients. So it's been a great ride. I really enjoyed it.
Cool. I love the fact that your specialty is on the tax side of the business because obviously there's a lot of overlap. I mean, there's a lot of overlap with what I do as a financial planner
Mhm.
with law and estate planning and whatnot. But I would say there's probably more of an overlap with taxes. So I'm really interested in hearing more about that, particularly in the space of buying and selling. I'll get a lot of clients that'll come to me or people who will come to me after a sale. Hey, what can I do to minimize taxes? And it's like, oh my gosh, it's a little too late. We should have been thinking about that prior to,
Right.
but we will get into that. Before we hop into our topic, and just so people listening, the topic today is for our insurance agency owners or really anyone. If you own a business, I think this is going to be relevant to you. We just might be using language that's specific to the insurance space, but we're going to talk about how to become a prepared seller of your agency. Insurance agencies are very saleable business. Even agencies that are operated poorly are incredibly saleable. And we're going to talk about how do you become more saleable, how do you increase the value of your agency um, before you go to sell. But before we get into that, I'm going to ask you, what is one thing about money you know today that you wish you would have been taught in school?
I wish I would have been taught in school.
Yeah.
I think about that in context of what would what today, how do I say that? Today, what would I teach my kids?
Mm,
So my
yeah.
wife and I, between the two of us, we have seven. One of them's
Seven.
20. Yeah, seven kids.
Do you know the average cost to raise a kid according to the USDA to age 18?
Um, I just know that I endure the pain every month. I don't know what the exact number is.
300,000.
Oh my goodness.
So
I
2.1
believe it.
million.
I believe
2.1
it.
million to get your kids to age 18.
So I've got a 20-year-old and one that just turned 18, graduated, and then we still have five at the house. We'll have three kids in high school next year and two in junior high. So still going to keep us super busy going forward. So I think like what would I want to teach them? And one of the things is that while student loans are great, student loans can really hinder opportunities later in life. And I definitely think if it's a wonderful that we live in a system where we can get loans to to get educated, right? Just to be able to afford education, I guess is the better way to say it. But I wish I would have slowed down, and I wish in high school, they would have taught me that it was okay to slow down. I didn't have to push through college so quickly. Could have taken my time, worked, borrowed less money. So that way I'd have more cash in my pocket today that I could put to work for myself, earning interest rather than paying interest on those loans. So I think that's probably one thing that I wish they would have explained to us a little bit better. Don't be in a rush. So
Yeah.
work while you're in school, earn some money, and then later on you'll be able to put that money to good use, working for you, so that you can focus in your later years on things you want to be doing.
Yeah, that's good. That's actually a very relevant conversation that we're having in my household right now. My daughter is going to be a senior.
Mm,
She wants to be a professional dancer. So I don't understand how in this country people who want to go into the arts, like their education is far more expensive than someone who
mm,
just wants to go into the
mm-hmm.
liberal arts. I don't understand that. They're going to be artists. They don't get paid a lot, and we're going to charge twice as much for college. But that's been a conversation of student debt, student loans, what's an acceptable amount to graduate with,
Mm-hmm.
the danger of them. Hell, I meet with 30, 40-year olds with still six figures in student loans, and we have to plan 800, $900,000 sometimes still going towards student loans, man. Like you said,
Yep.
like man, that could be money that could be going to other things that are more purposeful and meaningful. But there's also that balance, right? Of like, man, I got to get educated. I want to become an
Mm-hmm.
attorney, and it is expensive. What does slowing down look like? Right, right.
Exactly. Exactly. So had I maybe spent some time in high school getting some sort of a certificate where I could get a little bit better job
Mm,
while I was in
yeah,
college, maybe that would have been a good avenue. Um, or I mean, I still worked. Don't get me wrong. I still worked all through. I worked full time during undergrad, and then during law school, worked anytime we weren't in school. I was working, and then after law school to go on and do an LLM, which is a legal master's degree in tax law. That's a 1 year program, but I worked during the entire second semester. As soon as we got done with that first semester and I felt comfortable with the material that we were studying, I went to work. And so I
mm,
was working in the mornings and school at night.
yeah,
So even still working, I came out with a significant amount of student loan debt that covered tuition and the extra
yeah,
housing expenses of having a family while going to school. So I do think you're right. There's a balance that needs to be struck there. Um,
yeah,
but just letting go of that pressure of feeling like I've got to get through this now because this is what everybody else is doing, and
yeah.
I need to get out with a degree as quickly as possible. Um, Slow down, enjoy life, take
We
some
just
time.
we just published an episode. By the time people listen to this one, it'll be a few episodes ago about teaching kids about money. And a big part of it is having those conversations with them, and then also modeling the behavior that we want them to model. So
Hmm.
I love how you thought through that. Your context for answering that question was, what do I want my kids to learn? And I think what's really important with kids, so if you're listening and you have kids, is having conversations with kids about money. It's wild to me if you stop and think about the things that our kids are hearing about money, generally speaking, from us. It's we're complaining about it, we're arguing about it, we don't have
Hmm.
enough of it, and those are the messages that we're sending to our kids. And they don't always necessarily see us having the more thoughtful, critical conversations, or in our own kind of world as we're making decisions. They don't see that. They're not inside of our head. They don't understand that we're making sacrifices over here to do something that we value more. And I think it's so important for parents to have those conversations more transparently with with their kids. I told my wife recently, I said, like, let's not tell the kids that we can't afford that anymore, because we can. It's we've decided to do something different with our money. Yeah, we can do that, or we can do
Yeah.
this. Um, so it's just kind of thinking the messages that we're sending. So I really appreciate how you put that lens of what do I want my kids to learn. That I think that helps clarify, um, that question. All
Well,
right.
and I loved how you framed that too. I think that's super important for kids to understand. Setting goals,
Yeah.
particularly in relationships with other people,
Yeah.
you and your spouse or your significant other, you set goals, and sometimes you got to sacrifice to make those goals happen. And the kids need to understand that you're working towards goals. It's important
Yeah.
for them. So
Yeah.
I love that. That's awesome.
Speaking of goals, all right, let's hop into our topic for the day: how to become a prepared seller. It seems more and more and more the insurance space, it's a grind, dude. A lot of my listeners know that I own an independent agency. I've got an incredible team, an incredible business partner that operate that business. The business that I kind of grew up in. I think I was pretty much born into the insurance space. So I've learned a ton about um, just insurance, operating an agency. And the cool thing that is that for independent agents is we have an asset that is incredibly saleable. And it just a lot of the conversations, and maybe this is the circle of agency owners that I run in. There's different types of agency owners and how they think. The circle that I seem to find myself in for the past maybe decade or so are the guys who are operating agencies to eventually sell.
Hmm.
They kind of see it as this is like us. This might be some more so than others. Like for me, this is another stock in my portfolio, my investment portfolio. It's a little bit more
Hmm.
personal. My name's on it, but this is something that I'm building to one day sell. I know that's probably a lot of the clients that you're working with. Obviously, if they're coming
Hmm.
to you to sell or buy, in their mind they're going to sell or looking to buy. An
Hmm.
obvious statement. So what are the things that agency owners need to be doing that you see from your perspective as an attorney to prepare themselves for a potential sale? Now, but before I kind of like press you for kind of those items, I want to throw one out, and I apologize if this is one of yours, but I kind of find that it's maybe like the most important thing of any decision that we're going to make, whether I'm working with someone on personal finances. It's it's to really understand the purpose behind what you're trying to do, right? Like just to say I want to sell, I would be like, why do you want to sell? What are you trying to
Hmm.
accomplish? Is really establishing the end of what you're trying to do. Because at the end of the day, your purpose is going to determine whether you're ultimately successful or not in
Hmm.
selling. Are you looking for top dollar? Are you looking to make sure that you have a successor that's going to care as much about your clients as you do? Are you looking for a successor who's going to care about your staff as much as you do?
Hmm.
All those things are going to change um, the potential buyer that you're going to seek out. And I'll kind of end with this, and I'll kick it to you. Last year, my business partner on the financial side, my co-host, who's not here today, Xavier, Xavier and I sat through a coaching course. It was on how to become a prepared buyer. So
Okay.
we were looking at buying other investment firms. What do we need to do as a business to be prepared to buy? And that really gave me some insight into what the seller needs to do, because it's what am I looking for as a buyer? So it's the opposite side of the coin, if you will. And one of the things coming out of that course that I realized was we're not quite in a position to buy yet because there's some other things that we need to shore up first.
Mm.
And that kind of makes me think on the seller side, maybe I'm not quite ready to sell yet because there's some things that I need to get in order first. So that's what you're here for, as the guy who makes some of these, who's brought in to help these deals get closed. I want to hear from you. What do we need to be doing as agency owners to be prepared to sell our businesses?
Yeah, and so I do definitely agree with you. Understanding why you're selling or why you're exiting is a huge first step. Is it because you're tired of just working the grind every day, the 50 to 80 hours a week or more for some of these guys? It takes a lot, as you know, to run a business. Even if you're a solo, where you maybe have one employee or no employees, it still takes a lot day to day to keep that business going. So I have lots of clients who are just tired. They want to be done. They want a fair purchase price, but at the end of the day, they want to just be able to not have to show up to the office, and they don't want to have to deal with the legal liability and risks that come with being the entrepreneurial business owner. So I definitely think understanding that reasoning will help you match well with a good buyer, because if you don't have similar goals with your buyer at the end of the day, it's going to be very difficult to get that transaction over the finish line. And there's going to be a lot of deal fatigue. And deal fatigue is a real thing. You get in the middle of a deal and you as the seller, you're just tired. The buyer's been beating you up over due diligence items. You're trying to run your business, plus meet their demands, going through quality of earnings reports and financial audits of your company, and having every decision you've ever made kind of nitpicked in the due diligence process. And what might feel very repetitive because you probably already went through a mini due diligence during your letter of intent stage as you're doing this courting before your agreement. Now you're going through a more significant due diligence stage. And with the kind of rise of representation and warranty insurance, the due diligence and disclosures is I guess the scrutiny that is now being given to these disclosures for the representations and warranties in any deal has just increased because now you have insurance underwriters looking at everything that's disclosed. They want to know everything about your business if they're going to underwrite this policy. So, I mean, huge things. I think uh, as a seller, to be prepared, you really need to think of three categories. Okay, the three is going to be we're going to group a bunch of little things into early preparation for your
Okay.
business operations. Okay, so just thinking high level business operations. The second category would be your company finances. And then the third category would be your legal compliance. And some of these will overlap naturally, right? So this first one is your business operations. We want to be thinking about who are the owners, who are the managers, and who are your advisory team. So your advisory team is going to be like your CPA, your attorneys, your financial advisors, your bankers. These are the people that you should be communicating with and coordinating with on your business operations, particularly if you're thinking about selling, because you want to know from your legal counsel what's the best way to structure this deal. You want to know from your tax people what can I do on the tax reporting side to help minimize. Your financial advisors, once I have this purchase price in hand, I've now got cash. What am I doing with it long term to kind of support myself and my family into retirement? Your bankers, just same thing. Do you have financing and debt outstanding that needs to be taken care of and paid off at the time of closing? So you're going to have your team together, and it might also include your insurance people because you may need to pick up some tail coverage or other insurance products. Maybe you want to look into some life insurance on the side. Who knows what that might be? But you bring these people together and you coordinate with them. So you have a group of people looking out for your best interest, getting the company ready for sale.
So let me ask one question. Okay.
Hmm.
Kind of in your opening remarks, you said something that kind of stood out, kind of following up on something I said. And I think it probably needs to be said early on in this conversation is kind of knowing why you want to sell. And you said maybe you're just tired, right? Um, but you can't just show up one day and say, I'm tired. I want to sell tomorrow, right? So the question I would have is, as I'm preparing to sell, like, when does this preparation start?
Yeah. So part of that, I think it has to start today.
Mhm.
You Every day that you show up at the office should be a day where you're looking to grow the business in anticipation of that exit event. And what you do now will save you time and money. What you do now to prepare will save you time and money when it actually comes time to find that buyer, to sign that letter of intent, to ink that final deal document. So we want to look at, okay, what's the ownership look like today? If you sold your company, are you going to be looking to give gifts of cash to employees, your key employees? Or are you going to be looking to give gifts of cash to family members, your kids, your grandkids? You've got several $1 million now. Maybe you're going to use it all for retirement, but maybe you want to make sure you're able to share some of that with other people. Well, if we're going to be making, it would be better for you to make gifts of some ownership of the company or to enter into some phantom equity agreements with your employees. Maybe we need to put some of the stock into a separate LLC that's for the benefit of the employees, where that LLC holds the the equity that your employees or your family members might benefit from.
Okay.
But because we did a business entity transfer instead of a cash gift, we're now able to discount the value and save you on some of the gift tax reporting and obligations that you might otherwise have. So, but
So
we need to do that ahead
let's
of time.
yeah, let's sit here for a second. Let's sit here for a second. 'Cause I think this is really important from a tax planning standpoint. So you're saying if you are inclined to reward the people who have made you successful, your staff, for example.
Mhm.
What you're saying is if that's a possible plan, then prior to sale, maybe you gift them some ownership into the company. Is that for to reduce your taxable burden? Is that the
Mhm.
same as what's the difference of doing that versus me just writing them a check after I sell?
So definitely just writing them a check after you sell and treating it as a bonus. That's a totally normal way to do it. It's deductible to the company. If you did an asset sale where the agency is the seller of the assets of the company, it's just a payroll expense like
Okay.
any other payroll expense. So it's deductible to you, and that's great. Sometimes employees like to know that they're guaranteed some sort of share of the profits, either at the end of the year or at the sale event. And so we can accomplish that in a couple different ways. And this incentivizes those key employees, particularly producers who might otherwise be inclined to jump to another agency, where we can incentivize them with some of the profits of the company. We can do it with a phantom equity agreement where it's a promise to pay. They're not getting any actual ownership, or we could structure some type of ownership where maybe they don't have any voting rights, but they do get to participate in the sales proceeds to some extent. And you can create small pools of ownership where we don't have to give them everything, just a small little incentive.
Okay. So in the
Um,
Phantom agreement, that's more of you really don't own anything,
right,
but I'm basically committing to giving you some money after the sale. I'm going to bonus it to you, payroll
exactly.
expenses.
Yep,
In the other instance where I'm giving you some ownership, you have basis in the business possibly. When the business sells, I'm not
yep.
writing you a check. You're just getting money dispersed at the sale based off of whatever ownership percentage you own.
Yep. So
Okay.
one's the phantom equity is like a bonus, and it's just W-2 income, ordinary income rates. If they have some of actual equity of the company, however they receive it, that's going to get long-term capital gains rates.
Yeah.
I always caution clients about giving actual equity ownership to an employee, because it can be difficult to get it back if something doesn't work out.
Yeah.
Obviously, there's contracts in place to make sure you have the ability to buy it back, but you've typically given it as a gift or reward for past performance. You don't want to have to buy it back from somebody. So the phantom equity is usually the way to go
Yeah.
from an ownership standpoint.
And again, that's more of just like a there's no other than just having some agreement, there's nothing
Hmm.
legal that I'm doing with structure of my business, or there's no separate share classes. There's nothing like that. So it's a pretty simple. It's
Absolutely.
it's like a poor man's way of giving ownership to somebody.
Right.
Yeah.
It's an unsecured promise to pay is what it is. So if the company went out of business, there'd be no cash to pay them. There'd be nothing that they would be owed.
Yeah. Okay.
So that's on the employee side, but sometimes people want to do some long-term planning for their families, and that's usually where you'd see equity or ownership being transferred into other trusts for kids or given directly to the children if it's allowed in the state where you're living. So that kind of planning, anytime we're actually going to move ownership of the business to somebody other than the core people that are running it, we want to make sure we give at least a year for the shares to be held, um, and let that transaction kind of season a little bit so that they can for sure claim long-term capital gains treatment um, on
So
the
that
actual
that's
sale event.
important, right? That's important. I want to kind of signpost what you just said. There's a reason why we're waiting a year because
Hmm.
selling a business interest before a year is taxed at ordinary income tax rates versus long-term gain rates if they hold it for longer than a year. So that year is not just a suggestion. That is a very wise tax planning
Hmm.
right there. Okay.
Yep.
Yeah.
So that's the when we're talking about preparing the business, that's on the business operation side's ownership is one of the key considerations. If I'm going to
Yep.
make a gift to somebody of cash, to a family member, particularly to a child, after I close, I've now got a lot of money and I want to make a gift to a kid. Well, that gift for every dollar is taxable at the full dollar. But if I gift ownership in my business entity, I can discount that gift down to something less than a dollar. And so I'll get a gift tax savings. That'll leave me more exemption later on to transfer at death or later gifts. So I definitely think thinking about ownership and what you plan to do long term with your family is important. After
Yeah.
that,
And
oh, go ahead.
no, what I was going to say was what's really important about this point, and we had talked about this in a previous conversation, is when you're making decisions like this as a business owner, and this is I think a trap for a lot of business owners is we tend to we tend to default to what's going to save me in taxes.
Mm,
And we let that drive our decision where the reality should be is what decision is best in line with what I'm trying to ultimately do,
hmm
and what are the tax consequences of that? Because the last thing you want to do is give up ownership to a kid if it's really not your intention for your kid to have that money, or if it's your intention to take proceeds from the business and go start something else, but you need access to this capital here
hmm
that you just gifted just to somebody else. So it's really being really clear on, hey, what's my next step,
Yeah,
right?
absolutely. Absolutely. That is a great point. Definitely. And then once you get that ownership piece kind of dialed in, then you're looking at management. The goal is to be able to turn over a business that's as turnkey as possible without you present. The better you can do that, the higher the value of your business. So
Mhm.
having
Yeah.
key employees, strong management team in place when you're gone, you're no longer there, is going to help give the buyer confidence that there's going to be continued growth for the company. Whatever they're buying is going to continue to grow because even though you're gone, the people that have been managing this thing and keeping it going are still there.
Yeah.
So that's key, making sure that the right people are in the right positions. Uh, Again, turnkey. You want to be able to just hand the keys over to the company, so to speak, and then they can just pick it up and keep running. So I think those are the three parts of preparation of your getting your company ready. When we're talking about business operations, it's having that advisory team in place,
Okay. Yeah.
making sure you've got your ownership structure dialed in for your future long-term planning, and making sure you've got that strong management team so you've got turnkey operations.
I had
Uh,
a professor of entrepreneurship when I was at Tulane's business school. And this he was a business owner in New Orleans, like successful business owner, and he was an adjunct professor, and it was the best course ever because he brought in like real life experience and just like wisdom from someone who's been at it. One thing that never has never left my memory, and I still do this today. He always talks about having an advisory team.
mm,
A lot of us, we're not going to have a board of directors, but we have an advisory team. That advisory team needs to be your banker, your attorney, your CPA, your financial planner, your insurance person, and anyone
mhm,
else. Maybe today it could be like a high level business coach, but you should have an
mhm,
advisory team that you could pick up the phone, send a text to, call them, ask them questions, lean into them, get advice, bounce ideas off because we have blind spots as business owners. But I love how you include that as one of your as one of kind of the three things for business operations. And as you can already tell, like a lot of this stuff is you got to start this up early on in the process. So you might not even be thinking about selling today. You know, you might not have a plan to sell in 10 years, but you just never know when you're going to have to or when you're going to want to or where your
mhm.
circumstances can change. So operating every day as though you could possibly be sold is within reason, of course, right?
Well, right. I mean, you're
Yeah,
still running the business. It's still your baby. You're growing it. But we don't know what's going to happen.
yeah,
Sometimes a buyer will just show up. Somebody's looking to expand into your market. And if you're ready to sell, it could be if you're prepared to sell, meaning you've done the preparation work, then that could be a really great process for you. If you're not prepared, it's going to take some time and some money to get yourself
yeah,
positioned correctly to be able to move forward with that deal. And one other thing that nobody really likes to think about I mean, we're all mortal. Things happen. We get
Hmm.
sick, we get old, tragedies happen. Um, what kind of a position are we leaving our family in?
Yeah.
Have we really thought about um, what does the state require this for somebody to run our business?
Yeah.
Am I in a profession that's a licensed profession? And if so, is it enough for is my family going to be able to legally operate things if I'm not in the picture anymore? Do I need to put together some sort of a succession plan that provides them tools for carrying on the business, even if they decide to sell it now that I've something's happened to me,
Yeah.
but it's ready to go. It's
Yeah.
in the condition it needs to be in, and they can liquidate it as quickly as possible.
Maybe a little bit harder than selling your Apple stock, but
Right,
still,
exactly.
easier, easier
Exactly.
than, yeah, yeah, I gotcha. Cool. Okay.
So,
Uh,
so you've got that business operations piece, just getting your operations dialed in. But then we want to drill into two other areas, the financial side, getting yourself financially prepared and getting yourself legally prepared. When you go to sell a business, you're going to be asked to make 30 or so promises. We call those representations and warranties. And those are about the condition of the company and how you've been running things while you've been in control. They range everywhere from my business was legally formed in the state where I operate and continues to be in good standing, all the way to things like I took COVID money and I got all my forgivenesses. I used it how I was supposed to. And then anything in between there. Basically, I'm in compliance with the laws. My contracts are enforceable. I didn't violate employee wage laws. Yeah,
mhm.
the typical things that you have to think about as a business owner. And there's opportunities for sellers to disclose things that might not fit within the representation that they're being asked to make. And then you get into discussions and negotiations about how that disclosure is going to affect the purchase price. And sometimes it's as simple as we're going to hold back some money and we're going to set it aside and we're going to wait a period of time. And that period of time could be 3 years in some cases, where we want to see if anybody's going to file any suits, whether it's the government or a private individual. And so now you've got a chunk of your money sitting on the sidelines that you don't have access and control to because you're waiting to see how things shake out. So definitely, as you're looking at your financial and your legal obligations, uh, that's going to help prepare you to answer those representation and warranties. So let's talk about the financial first, because I think it's the more important of the two, really, because it's going to drive purchase price offers. And the first is just good accounting. Do you have
Yeah.
clean books? What do your books look like? Um, do you have your financials prepared monthly, which you should?
Yep.
Do you have your quarterly reports? Do you have your annual reports? Obviously, people like to delay their tax filings, and that's okay. But do you have any delinquent tax filings? I mean,
Yeah.
you didn't actually get filed on time. Do you owe any taxes? Um, Particularly payroll taxes.
Hmm.
For some reason, I see a lot of people that seems to be a source of funds that they like to, rather than give to the government, they like to hold on to and then just pay the penalties.
Yeah.
Um,
I don't know about that.
not a good business
It's,
plan. Very
it's,
expensive loan
then
to
you start
take it
playing with
from.
other people's money, right?
Yep.
If you're not going to make your own quarterly estimates, that's one thing. But when you start like delaying like payroll taxes for employees or contributions for employees,
Hmm.
that yeah, that starts getting into some crazy land that you don't want to that you don't want
It,
to venture
yeah,
into.
exactly, exactly. So having good financials, good reporting, um, that's super key because the first thing that a buyer is going to want to do is they're going to review your financials, and if they're a sophisticated buyer, they're going to have basically a forensic review, a quality of earnings report to look to see um, if you've been running things the way you should be.
Hmm.
So making sure you've got a good bookkeeper helping you, whether it's an internal person or you're outsourcing it, that person is probably you're going to have your biggest return on investment in your bookkeeping. So getting a solid bookkeeper.
Say that again. Say that again for me.
I, I think you're going to have your biggest return on investment by hiring a good bookkeeper.
Huh. Interesting. Okay. So by having keeping good records, spending money on keeping good records.
Hmm.
Um, yeah, that's good. That's gonna be the highest return on investment. And
Because that's,
I would add to bookkeeping as well, especially if you have a large amount of agency bill type stuff,
oh yeah.
surplus. Man, have clean accounting on that is priceless. It's golden. We've seen some pretty funky stuff, and we actually just outsourced that portion of our accounting, but we
Hmm.
kept it all in house until we had it dialed in. And in fact, when we outsourced it recently, the bookkeeper,
Hmm.
this was one of those moments of like just kind of a sense of pride that I had in kind of driving to get to where we were, and then my internal kind of operations person who just kind of like relentlessly continues to to take my kind of push
Hmm.
for as close to perfection as possible. The bookkeeper told us that we were in the probably the top 10%, if not higher, of agencies that have the best records for agency bill. So I was like, oh, that's good. Okay, cool.
And that is a huge thing, on 2 points. So one, insurance agencies have particular accounting needs that some other just goods and services businesses wouldn't have because of how you're accounting and tracking for commissions and premium payments. So definitely, I agree. Find a bookkeeper, whether it's internal or you're outsourcing it, who's familiar with insurance agencies. So that's a huge thing that I think we need to point out. And then two, yeah, agency build stuff. I have a deal right now that that's one of the biggest hurdles we're having is that they
Really.
just did not track
Mhm.
the seller. My client's the buyer. The seller did not track their agency build uh, commissions and premiums like hardly at all. So there's these huge losses on the company's books that we're trying to kind of untangle. Like
Yeah,
who actually owes the money to the
that's right.
agency? Um,
Where are the liabilities? Kind of like who do I owe?
yep,
Who has a policy that has not been paid by us as a potential E&O claims? Like it is, man, it is.
yeah. So
It's a
so that's
scary dark
been
world. Yeah,
so particularly if your agency is got agency build uh premiums and commission, yeah, definitely keep that clean.
yeah,
That's so kudos to you for making that a priority because that can be a nightmare. Once you have clean books, you can actually get a really good valuation. You can hire somebody to sit down with you, um, and kind of go over what the industry standard is at that moment and be able to give you a really good snapshot, a good picture of what can you expect as a seller. What's what's a good range, both on a multiple of gross commission or on your EBITDA. Um, and spending some time with somebody who can really walk you through what the value of your company is invaluable because
yeah,
then you go to market better informed. When somebody just shows up at your door and says, "I'll give you $1 million or $10 million, whatever it might be," sometimes we get blinded by the dollar signs, not recognizing that maybe our company's worth more.
yeah.
Um,
There's nothing worse than going into any situation where you don't know what you don't know.
right.
Right. I'm going to have a meeting tomorrow with a particular person in the investment space in an area that's a little bit cloudy to me.
Hmm.
And the first thing I did was reach out to a friend of mine, another advisor who kind of plays in that space. That's her space. And I said, hey, I need to know what I don't know. Like I don't need to know everything, but I just need to understand what I don't know. So when I walk into that meeting, um, I'm okay not knowing something. I'm perfectly fine. Like in fact, I think that's a strength sometimes when you're able to say like, I don't know everything. I'm okay with that, but I can learn
Hmm.
things. But man, when you don't know what you don't know, man, you find yourself in situations that are uncomfortable very fast.
Absolutely.
So last thing you want
Absolutely.
to do is sit down with a buyer or a seller, or in this case, a buyer, and not be prepared with something that you should have known.
Hmm. Yeah, the better prepared you can be, the better the outcome, just mentally, emotionally, and then the final deal result. Everything will just be better.
Yeah.
So,
Okay, cool.
um, so so we've prepared our company where we've made sure our ownership's structured. We've got our management team set up so that our buyers understand there's going to be long-term growth still, even when we're not involved. We've got our advisory team who's been helping prepare us. We've got really clean books. We've used our clean books now to get a good idea of what our valuation is, what we can expect at market. The next thing is to make sure that just from a legal standpoint, our company's clean. That we're doing everything we need to do, and our buyers won't have to worry about some sort of a lawsuit cropping up later on that we caused because we just weren't in compliance.
Can you give me an
Um,
example of something?
yeah. So in the insurance space, what do your contracts say with your carriers? That's a huge thing.
Okay.
So legally, can you transfer your assets or your company if you want to do an equity deal, um, and have your buyer take over your carrier appointments? In this hard market where carrier appointments are becoming so scarce, new carrier appointments, that can kill deals. You might
Mhm.
want to sell to a competitor or a friendly competitor, somebody that you know, not one of the big aggregators. Um, and are they going to, or even a key employee, maybe you have a key
Yeah.
producer who wants to take over. Are they going to be able to do that and get those carrier appointments? So you need to start having conversations with the carriers up front. I want to think about selling. You got to look at your carrier contracts. Most of them say the carrier has the right to cancel the appointment upon sale. And I've had situations where just giving the carrier notice, the carrier
Mhm.
was like, "Oh, we're gonna like," they sent notice, "Hey, we
Wow.
inked a deal. We've got a purchase agreement. We want to transfer the appointments over to this key producer who had been working for the agency for 5 years." And the carrier said, "No, we're canceling all your contracts. We're mailing notices to all your insureds." So
Holy
knowing that,
smokes.
yeah, right. So now you're
Holy
scrambling,
smokes.
scrambling to place,
Yeah.
contact clients and place these people with a new carrier if you can.
That speaks to make sure you have really good carrier relationships,
Hmm.
especially with the reps. I know sometimes we love to hate on reps, but man, maintain really good relationships because you can prevent some of that stuff, right? I mean, if
Oh
you
yeah.
don't like your rep and they don't like you, um, like you said,
It,
in this market, that's not a good thing. But if you
yep.
have good relationships can go a long way. Maybe that might be the second biggest return on investment. Number one is on bookkeeping or good financial records. The second one is investing in good relationships with your vendors and your reps.
Yeah, that's really kind of like this unspoken but key, I think an essential piece um, as part of this transitioning your company is having those good relationships. I had a client where the carrier took his client, he's in a kind of a niche area of insurance, and there's only a handful of other agencies in the country that compete with him. So it's not even like an agency in the neighborhood. This is in a completely different state. And he couldn't get an appointment through this carrier to sell a certain line of insurance. He sold insurance line A, but he couldn't get B because B had already been given exclusively to somebody in the Midwest. Well, carrier took all of my client's contact information, all of his customers, and then gave it to agency that was doing lines B so they could cross sell. Well, agency that was selling lines B started immediately contacting my client's customers to sell
Okay.
them line A, try to steal that business from him. And the only reason he knew was because one of his customers who he had a long-term relationship with called him and said, "Hey, I've got like 5 calls today from this other agency over in the Midwest. You know, what's going on?" And so we contacted the carrier, and it was really that rep relationship because the carrier under their contracts was allowed to do it. They were allowed to share the information, but because of that rep um, relationship that he had, the carrier was willing to tell the other agency to cease and desist. And that was really the only way to get it resolved without having to go through some very costly litigation. So I
Wow.
agree with you 100%. Those rep relationships are key.
Wow.
Absolutely.
Wow.
So one of the things I see a lot too is sometimes we like to incentivize employees by sharing revenue with them, right? Producers get a split of their commission, and we'll enter into these agreements where,
Mm.
whether we mean to or not, we've effectively given them ownership of their client relationships. So when I go to sell my book of business, am I actually selling something I own, or am I now trying to sell something that 50% is owned by one of my employees? And what happens if that employee leaves in a year? So we want to
Yeah.
make sure our contracts around our revenue base are, we own them 100%. We can share revenue and bonus commission, but we want to make sure those contracts say that we own them. We have the right to
Yeah.
transfer them to somebody else. We don't want to give our employees a right of first refusal to buy their books, because if we have a buyer come to the table, well, now our employees have the right to take a piece of their book if they would like to. Um,
That's a really good point. I've been having a couple conversations around that exact topic. Um, I think it's a noble thing that we do as agency owners. Like we go
mhm,
hire a producer and we're like, hey, yeah, come work with us. You know, we're going to pay you well. We're going to split commissions. And yeah, you can have some ownership in your book of business, right? It's
mhm,
noble. It's like, yeah, that's kind of cool. And then, on its surface, it sounds great. But you're right. Like in a sales situation, if all of a sudden I got a producer, let's say they make up a third of our business on the books and I go to sell, how do I sell? Can I include their book in the purchase of mine? So sometimes it may be better if you want to give someone ownership, it may be better to do that phantom deal that we talked about
yep,
earlier, where, hey, like you don't have ownership in your book. Then you're going to have ownership, a smaller amount in the entire book, or
mhm,
some form of ownership type privilege in the entire book. And I think
yep,
from a culture standpoint, man, what does that do from that producer standpoint to now look at the entire business, have ownership in the entire business to want to see the entire business succeed, as opposed to
mhm,
saying, man, I'm just focused on my book. I don't care about my other producers or what's going on there. I just want to build what I own or what I have ownership in. So I think that point from a sales standpoint, but also from a culture standpoint, can be a huge point of a huge point to focus on in terms of how we structure our producer agreements. And this is something that I was having a conversation with Carrie Wallace about this recently. And I was one of those noble people like, yeah, I'm going to give him ownership in his book. And she's like, don't do that. It's the worst thing you can do. I'm like, why, Carrie? Come on.
yep. I mean, I see it all the time, unfortunately, and it's we to some extent we have it in the legal community as well. You develop this book of business, you have the client relationships, so you can leave, and people will give you money to leave where you're at and come join them and bring your revenue stream with you. So it can be very tempting
Yeah.
for producers to jump ship. I had a client recently who needed to renegotiate a producer agreement with his key producer. The key producer rejected it and left, and they didn't have any contracts in place preventing him from soliciting that customer base. And then several weeks later, the client finds out that this producer has been negotiating for months with this other agency, that he was going to open up a shop for them in that area. So just having good contracts with your producers and employees is super important, so that the you understand what your rights are, they understand what their rights are, but you understand
Yeah.
you have control over your clientele.
So let's kind of sit on this spot really quick. You talk about solicitation, kind of in the world we live in now with non-competes and whatnot. Break down really quickly for us the difference between non-solicitation and a non-compete and a non-piracy, and how kind of those three interact, and what a good way to write that provision into contracts is or agreements is.
Okay, so non-competes are exactly what they sound like. You're not allowed to show up and compete with your former employer, or if you're a seller, you'll be expected to sign a non-compete with your buyer. Uh, the most states and now the federal government are moving to a system that disfavors non-compete agreements, because the idea is we want people to be able to work. We think it's good for the economy and it's good for the customer to be able to have options. So non-competes are, particularly now with the new FTC rules, are no longer legal, except in some very limited situations. One of those is protecting goodwill. So if you sell your business, some of that sales price will be allocated to the goodwill associated with your name and with the name of your company. And to protect that, the buyer is able to get a non-compete from you as the seller. That's going to prevent you from not only working in that space, but also helping other people's work in that space. And you typically try to narrow it by geographic area where the business is doing business. Um, that's very different from a non-solicitation. Now, non-solicitation agreements can be overly broad and rise to the level of a non-compete, so they need to be properly structured. But the concept there is that by virtue of you working with our company, you have gained access to our trade secrets, to our customer lists, to our pricing methodologies, whatever it might be for your particular industry. There's things you do that are a little bit different than your competitors, and that's what makes you successful in your space. And part of that is your customer list. So it's okay to say, hey, you're not allowed to use that confidential information uh, to promote a competing business against us. So you had access to that only by virtue of the fact that we brought you in, we trained you, we helped you build your practice. Um, so non-solicitations are totally okay as long as they're properly structured and don't uh, kind of go over into that non-compete space. And typically you want to make it so that they can't compete, they can't solicit your customers and your current employees. We can't stop them from soliciting somebody that's quit and kind of gone out on their own accord.
Mm-hmm.
But the idea is you have this talent pool, you cultivated this talent pool, you trained this talent pool just because they worked for you. Uh, your former employee shouldn't be able to come and take your really good key CSR or other key employees that you have. Um,
Yeah, and if I'm a buyer and I'm looking at two agencies to buy and two successful agencies, and this one has some good, strong non-solicitation language in their producer contracts, and this one doesn't
mhm,
have any producer contracts, I'm gonna be a little bit I still may buy this one,
mhm.
but it might not rise to the same level of multiple as the other one that's got stronger agreements and stronger contracts. There's some risk
Yep,
involved here, and I need to be rewarded for my risk.
absolutely. So your buyers are looking at again, can you demonstrate through your financials and your operations that the company is going to continue to have that upward growth stream
Yeah.
long term over the next 5 to 10 years? And that's really going to drive that multiple. Um, the other things, doing simple things too on the legal side can be good. You typically have to file annual reports with the states where you're located. You've got to do minutes. Even if you've got an LLC where the rules are a little bit more relaxed, hold an
Hmm.
annual meeting for your members and your managers and just document it. So that way you've got records that show, yeah, we encountered some issues. We made some business decisions. That's even helpful for things like we decided not to make any distributions this year, so we have a bunch of cash sitting around. What are we going to use it for? Um, Particularly if you're a corporation and there's limits on how much accumulated earnings you can have sitting in the company. That raises tax audit issues. So
Hmm.
making sure you've got those minutes documenting why you're doing these things, super important and very basic, very simple. And your buyers, if they're sophisticated, they're going to want to see that stuff. They're going to want you to produce those documents so that they can review them and make sure you've been respecting the separate nature of your company. Um, Another thing to think about on the legal side are what kind of consents do you need? We talked a little bit about carrier appointments, but
Hmm.
you have a landlord. Your landlord's going to need to give consent. So when you're negotiating those leases, and there's always going to be a clause in there about assignment, being able to transfer that lease to somebody else, that's going to include the sale of a business and how much ownership interest can be transferred before you have to get their approval. Is there a cost associated with getting their approval? Typically, they want some fee. I had a lease agreement one time that said they were entitled to 25% of the purchase price. Yes, 25% of the purchase price was the fee for selling the company and trying to get out of that lease. Now, thankfully,
Who
uh,
negotiated that?
I who knows,
The
right?
the business, the building owner had a really good attorney.
Absolutely, and the client just signed it, not even thinking about it. And it was like a $15 million deal. It was a substantial purchase price that we were talking about. And finally, I got the landlord's attorney to realize there's no way a court was going to enforce that. But there was some risk there. There was some legitimate risk that
Yeah.
we could lose. I mean, he entered two parties with equal bargaining power. Um, the court will probably assume that that was a negotiated term that should be upheld. So there's risk there. So paying attention to those kinds of things, your SBA loans or whatever loan documents, there's almost always change of ownership provisions that
But come
put
on,
restrictions.
we don't. As you're talking, I'm like, I'm feeling a little bit of shame here. Like, man, like I read a lot of contracts I sign, but I don't read them all, man. Like, there's some level of like, I can't probably change it. I can't change SBA language, so I'm not going to read.
Well,
Or I
yeah.
can't, there's some level of, man, gosh, I hope I'm doing business with people I trust. Maybe that's one of the things. Do business with people you trust. I don't know.
Well, well, part of it's the having that advisory team. I get nobody wants to incur fees, right? Because that just eats into profits. Having that good advisory team that can be able to do quick reviews of documents that they've seen 100 times, because the SBA forms, like you said, are almost always the same. Um, that's key. I mean, you can always do it on your own. I know very intelligent business owners who could be attorneys, but just having that team's always helpful. But yeah, I can't tell
You
you.
know,
I can't stress this enough.
every now and then I'll go and like fix like a faulty uh thing on my toilet where it flushes, but it doesn't mean
Hmm.
I should be a plumber.
Right.
Right. And I think that's something I think, especially the more entrepreneurial of us agency owners, sometimes we think that we can do it on our own, but it comes back to this idea of where's my true value? Where am I compensated more? Am I compensated more to read and write my own contracts?
Hmm.
Or my contract or my is my value in building my team and driving more revenue, and let me pay David to write my
Hmm.
contracts. Let me pay Carrie to be my CFO. Let me hire out a bookkeeper, right?
Right.
Is my value in trying to design my own retirement plan? Yeah, people can do it on their own, but is my true value, and again, building a team and driving revenue, and let me hire somebody who knows, who can maneuver, who can navigate that for me. I think that's when you start looking at professionals. Yeah, there's some stuff you can do. You don't need to hire a CPA. You can file your own taxes.
You
Uh,
could. Yeah, I mean, you could.
you don't need to hire a financial advisor. You can do it all on your own. You could, but where are you making most of your money?
Exactly. Exactly.
Um,
Your emotional and physical energy, mental energy should be spent on doing the thing that you do best. Um, I get there's budget constraints, right? We all have
yeah.
to live within a budget. I understand that. Sometimes it's not feasible
Mhm.
to have a professional step in and handle every aspect of your business, but it's almost always more cost effective.
Mhm.
Um, because
Yeah.
it's what they do all the time. So they can do it faster typically and better than how I could do it.
And there's some element of they carry the warranty, the liability,
Hmm.
right? Like if something goes wrong, I can go back to them.
Yep.
Whereas if I go download a contract from LegalZoom.com for a producer agreement, there's really no one, there's no recourse. There's no I can go back to. Um, I don't want to go. I want to be respectful of your time here. I don't know if you covered everything that you wanted to cover, but there's something you just said that made me think of maybe one of the more important things that you need to do to prepare to sell. So before, I want to make sure that you've kind of covered some of your bigger points before I go there.
Yeah, no, I think those are the key. I mean,
Yeah.
we could probably do a whole podcast on just
We can
what
keep
legal
going. Yeah.
requirements there are, but I think those are kind of the keys that we're
Look,
talking
guys,
about.
if you want to do a podcast on legal retirements, I wouldn't bore you with that. Just go hire an attorney. Let them deal with the legal stuff, right?
All right.
No. One thing you just said that I think is huge, and it's kind of unsaid in too many spaces. You talk about
Hmm.
the emotions involved. I think probably one of the things that gets in the way of us selling is the emotions.
Hmm.
Is if we're not emotionally ready to sell the business I mean, because like our businesses, they're like a family member. It's like a part of our family. It's like a child. And like
Hmm.
I spent 10, 15, 20, 30 years pouring my heart and soul into this, building relationships with my clients, building relationships with other people in the industry. And then all of a sudden, I'm going to sign a contract and all that's going to go away.
Hmm.
Am I emotionally ready for that? That might be the biggest obstacle. Hiring a bookkeeper is easy. Getting your contracts written up is fairly simple, right?
Hmm.
Building relationships with your vendors, challenging, but you could do that. Like becoming emotionally ready, man, That's a challenge. That's hard.
It is. And your business is oftentimes um, such a key part of your identity. I mean, we all have different
Mm,
aspects of who we are, right? I'm
yeah.
Dave, I'm a lawyer, I'm a father, husband, I like to surf, be outdoors, but so much of what I do during the day involves my company and my employees, my clients. And so the vast majority of people that know me as Dave the attorney, and our relationships are based around the trust that they have because of that knowledge that I bring to the table.
Yeah.
And just being ready to kind of let that go is can be hard.
Yeah.
Because
Business
it's
is
almost like losing a part of yourself in a way, and your
well, you said
standing in
it.
the community.
Yeah, you said it best. The business is a key part of our identity.
Yeah,
Man, that's something that's hard to walk away from.
yeah.
Shoot. Dave, this was a great I've got like pages of notes here. I love to selfishly invite podcast guests that are talking about things that are of high interest to me. This is definitely something that's interesting to me as an agency owner, but also interesting to me as a financial planner who works with agency owners. So it allows me to help kind of nudge them and push them along in some of these areas, especially when they tell me, "Hey, yeah, I want to sell in 5 years. I want to sell in 10 years. What do we need to be doing?" Well, you need to be building your team of advisors. You need to be making sure you're doing X, Y, and Z. So this was
Mhm.
man, this was great. I appreciate your time. And could you kind of leave us if and we'll also put this in the show notes. If someone wants to get in touch with you or reach out to you, where's the best place to find you?
Oh, so PFS Law, P is in Paul, F is in Frank, S is in Sam, actually stands for Professional Financial Solutions. So PFS Law. You can find me online at pfsonline.com. Um, and so you'll see the service offerings of the company as a whole. So PFS Law is affiliated with the larger PFS Global Managed Services Group. So
Yeah.
they
Fantastic.
offer a lot of different services in addition to legal. But yeah, happy to
Cool, man.
chat with anybody. So always look
Awesome.
forward to meeting people in other places.
Appreciate you, man. Take care.
All right, thank you so much.